Alrighty, if you've ever looked at your credit score and you think you know all the things about your credit score based on what popped up in your mail, you are totally wrong. And so we're going to break it down today. Credit Score 101. My name is Marina Tolentino. I'm a real estate agent here in Hawaii, and I'm joined today with Jessica, who is my awesome lender friend. And so she's going to break it down for us, right? Because we get confused. There's a lot of misinformation out there about credit scores. And so she's going to just tell you what she has to do on the back end as a lender and some common FAQs she has to deal with. So with that, Miss Jessica, tell us all about the credit scores.
Credit is a huge thing that comes up when people are maybe hesitant to fill out a loan application, because we say, okay, we're going to pull credit, and everybody's alarm bell goes off and says, but if you pull credit, it's going to ding my credit score. Yeah. When you pull credit, there is a notice put out that yes, your credit score has been checked. When you're shopping for a mortgage, you can think of maybe a 3 to 5 point hit on your score. It generally is not a huge ding to your score. If you are shopping for a mortgage and you're talking to multiple lenders, as a lender, we can pull your credit multiple times in a 30-day period for the purpose of shopping for a mortgage, and it will not affect that score. It's one ding. If you come see me and you get your credit pulled, then you go to Kay Jewelers and you go buy a fancy gold chain on credit, or you go try to buy a new car, and all of these places are pulling your credit, you're going to see many more dings and more significant dings, right? Because those are consumer products. Those are frivolous. Well, maybe not always frivolous, but you're not shopping for a mortgage. Don't be scared about getting your credit checked. Our scores are changing constantly throughout the month. So that's number one that I think is really important. The other thing that's also really important is I know that my bank sends me a monthly notice about my credit score, and I check it out and I think, ooh, that's great. And I will have people contact me after I run their credit and I tell them their score, and they say, that's impossible.
So-and-so said this.
Capital One said this. What we are doing when we are pulling your credit score for an official check, there are 3 different credit bureaus that pull your score. They're all keeping different tracks and they have different criteria. We take that middle score, and that middle score is what we use. If 2 people are applying for a loan at the same time, we're getting each of those middle scores, and then we have to use the lowest of those scores. So sometimes you hear combined credit score of, what that means is the combination of those 3 bureaus pulling your credit, and you take the middle one. So that's really important as well. When I pull your credit, my job as your lender or someone who's shopping for a mortgage is to look at the whole picture. I see all of your debt. I see your student loans. I see that Kay Jewelers gold chain. I see all of it. And so we can look at a pathway to better credit if you are at a point where it's going to hurt you on your interest rate. There's different thresholds. So we are looking to maybe get to that next threshold where we know it's going to bring your interest rate down. So it's important that we see everything. There's some tips and tricks that you can use to get your credit score up. I think of the credit score as like your adult report card. It's how you should be financially responsible. That's really what we're all trying to do is when we adult.
Which I think is a good point, because let's be real, if you're trying to buy a house that's $500,000 and you don't think someone's going to want to know if you're credible or not, that's the whole reason.
Absolutely.
The pre-qualification, it's like, do you pass the test to qualify for this huge ass house bill?
Totally. Yep. So we got to know, what is the likelihood that you're going to pay back your debts that you take out. And there's different loan programs that have different thresholds. Some are more generous than others. So maybe it's good for you. Some really important tips for keeping your credit score at a great number is, number 1, keeping your credit cards at not using more than 30% of your balance. If you have a $1,000 limit, you're keeping your balance below $300. A quick trick that you can do if you find that you are higher, you can always call your institution and ask them to raise your credit limit. It doesn't hurt. You can call and ask. That's a quick way to lower that ratio. 30% is the gold standard. Actually, paying them off is the gold standard, right? Yes. Paying them off every month or even twice a month. Because if you put a whole bunch of purchases on your credit card at the beginning of the month and you don't pay it off until the end of the month, but I check your credit score in the middle of the month, then it's going to show a high balance. It is a snapshot in time. So if you know that you are looking to purchase a home, think about maybe working on paying it down.
Which I was a case example of this, right? So I put all my business expenses on my credit card. When we pulled it, it was pretty high because I was about to pay it off. And she's like, all I need is a zero balance. No problem. Pay it off. Here's the zero balance, you know? But instead, my husband does this and he calls it credit hacking. He just pays it off once a week. He does like a big chunk once a week. And so it's constantly low balance. And I think that's a good way to do it. And our scores have improved.
Yeah. He wins.
Yeah.
Good job. Well done.
Gold star, honey.
Yep. So that's that, gold standard, pay them off once a week, every 2 weeks or something like that. But do think about keeping that balance lower. That's really important. And then another one, it's kind of a quick trick. Sometimes it works, but it's going to take a little bit longer to see. This is especially important if you don't have a credit history. So if you're newer, and that is to become an approved borrower on somebody else's card. Yeah. So if your parents have great credit, don't do it if your parents have crap credit.
Only do want to be on the good ones.
Yeah, do it on the good ones. Or maybe your partner or something like that. But if they're willing to let you be an approved borrower on their card, you can see a jump.
That's risky to them, right? Like what if you were to default, then it dings them? Yeah.
So maybe you become an approved borrower, but they don't give you one of the cards, right?
That's smart.
You're just there. Emergencies only, that sort of thing. So those are kind of 2 quick tricks to do that.
So what's like minimum barrier? Like if you're looking to get into a loan, minimum you want to see for a credit score?
On credit score, well, anything in the 700s, it will make us happy.
Yes.
700s are better.
And then if it's lower than that, what do you see? Just higher interest rates?
You will see, yes. And so there's a formula for each threshold. And if, folks want to call me and tell me about where they're at, I can give them a better idea because rates change every day, program to program, all of that. But 700 plus is great. If you're below, it's not bad. I mean, it's not terrible. It's not the end of the world. And we can look at your full credit report, or you can get a free credit report. That's also really important.
Totally.
You are allowed to get a free credit report. Credit report is different than your credit score. The credit report shows everything. So if you monitor your credit, you go to freecreditreport.com.
Just going to ask you, what's the site?
Yep. I think that's it. We'll put it up afterwards, something like that. You are entitled to 1 free credit report every year. This is the law. So get your credit report. That's also a really important time to look to see, have there been any frauds? We've caught fraud that people have been experiencing and they didn't even know it simply because we looked at their credit report. So it's really important to do that. And we can take a look and see what the path is to doing that credit repair.
But I mean, I've worked with clients with VA who are like literally 615, 620, and they've been able to sneak in, but they still get that zero down, and they're able to do it.
If you're VA, you get some help. So if you're VA, you get away with a lower credit score for sure. So,
but I mean, their interest rate isn't maybe the best of what it could be if it was at 750 or something.
Absolutely, absolutely.
It still rewards you to have good credit. Yeah.
But again, it's case by case, so you have to go through the application process. We have to see where you're at. We have to know what's on your credit report. So, and honestly, we want to help you if we see that maybe you don't have a great credit score and you have a lot of debts or things like that, and you do happen to qualify, we need to have a conversation about responsible spending because I don't want to put you in a position where you're going to be uncomfortable.
Totally.
It's not about that. It's about full financial wellness.
Yeah. So. Which is just a note too. Just because you're pre-approved for something doesn't mean you need to purchase at that amount.
Absolutely. Just because, we
don't want to max out.
We want to see what you qualify for, but we need to know what your comfortable monthly payment is and all in. We want to know what all your housing costs and how are you going to be comfortable and feel safe for yourself and your family.
I think last thing is just right before we started filming, she was saying she has a client right now who the wife has bad credit, but the husband's good. And so you can just do one person on the loan, actually.
Yep. So if that's another thing that comes up is sometimes with, in this example, a husband and wife, she does not have good credit and she has a lot of debt. So we are going to take her off of the loan and the loan is only going to be in his name. She can still be on title of the house. Yep. She can still own the house, but she won't be on the mortgage. And so we need to either only qualify them for his income, or maybe we have another co-signer. So there's a lot of strategy that we can do. So just because you may not have great credit, it doesn't mean, or no credit, no credit history, there's still things that can be done.
Which I think to wrap this up is just a good reminder. So even if you're doing a pre-qualification online, right? So if you're going through Rocket Mortgage or whatever click ad you got, just because they spit out a number doesn't mean it's accurate because they're not actually looking at your financial documents. So it's so important to have that initial conversation with a human being, especially one in Hawaii, because as you become a home buyer and you're ready to enter the marketplace, a lot of realtors don't want to work with lenders from the mainland because things fall through the cracks and we're constantly having to rescue deals. And so it's super critical that you talk with Jessica and then you talk with myself as well. We're a really good team and we communicate really effectively. But really, when you start the process, we're joining the vendors, right? Yeah. So it is like we all work together. And then once we get an accepted contract, we bring in a few more superheroes and we really are just pushing to the close. That's a good analogy.
I love it. It's such a good analogy. Such a good analogy.
But with that, so I hope you guys learned something new about credit. This is really informative because, like I said, I think there's a lot of misinformation out there and we just jump to conclusions based to whatever number you got in your mailbox or in your email. And so this just kind of breaks it down of like some 101 stuff for you guys. But we're going to keep pumping out content for you. So make sure and like and subscribe so you see more. And we'll have another video for you next week. See you soon.